What is going on, traders? Happy Thursday to you. Hope you guys are having a wonderful day. A couple of important updates in the cryptocurrency market today. So I wanted to make a video and go over those points. Let us get right into it. Why don't we? So market cap is currently at 171.8 bill. This is about a 7% drop over the last couple of days. I would say that this pullback is rather expected. I mean, nobody knows when the market will pull back exactly, but after the bulls have exhausted the rally of these coins, obviously a pullback is expected. I mean, we're coming from a major bear market. So, rallying from 120 billion in market cap to 171 billion in market cap. I mean, of course, there's going to be some exhaustion point at some level, and we are seeing that now. So 7% pullback, not that bad. We're not even in correction territory yet. Looking at the top coins, I mean, obviously most or all of the coins in the top 20 are down, but a couple of notes here. Ethereum, if you saw my last video from a couple of days ago, I was saying that there were some warning signs on Ethereum and why I think Ethereum would drop at a faster rate than Bitcoin. And lo and behold, it's dropped at more than double the rate that Bitcoin has. Go back to that video if you want to see my explanation on that. But we'll go over Ethereum in a bit after the market cap update. So a few coins on which I'm looking for buybacks, and keep your eyes peeled for the trade alerts if you want to get alerted of those buybacks. Link is in the description for the trade alerts. But EOS, Binance Coin, and Litecoin, these three were three of our top gainers in 2019. Over 200% gains on Binance Coin, over 100% gains on Litecoin, and around 50% overall gains on EOS. So these three, along with coins like Engine Coin and Raven Coin, have been three of our top gainers in 2019. So I'll definitely be looking for buyback opportunities here, as well as other coins as well. Tron down 13%, taking the heaviest hit in the top 20. All right, looking at the overall market cap, I've been going over this chart in the last couple of videos. I love this chart because it gives you a visual representation of the overall movements of the market and what's actually going on. So going all the way back to 2014, the overall market cap has been trying to pierce this 21-week EMA, 3 or 4 times before finally piercing through in October 2015, which propelled the bullish rally that lasted a little over 2 years. Now, same thing has been going on here, right? We've tried to pierce the 21-week EMA 3 or 4 times before finally piercing through last week. And we are now seeing some natural resistance around this level here. As long as we don't fall below the 21-week EMA, then we're still in good territory, right? We're over the 21-week EMA. There are some bullish signs you see here that I highlighted. The significant amount of volume that came last week was some of the biggest that we've ever seen in the cryptocurrency market. You see the RSI at the same level as it was here when it broke out in October 2015 to start this bull rally. And then obviously the MACD crossover coming from oversold territory, the MACD crossover and upward trending direction. So a lot of still great signs on the overall market cap. And then lastly, the pattern that we see here. I mean, you want to see reversal patterns coming from a bear market or coming from a steep decline, right? So your reversal patterns, they can take many forms, but some of them are rounding bottom, cup and handle, Adam and Eve. And in this case, we do see an Adam and Eve forming, right? An Adam and Eve is just a form of a double bottom where you see a sharp valley bottom followed by a rounding bottom, right? So this is the Adam portion, this is the Eve portion, and these do act as reversal patterns coming from a downtrend. So this, along with the piercing of the 21-week EMA, if we can get above the resistance level that we see here in white, then I think that we will continue on the bullish rally, as I said, on path to 200 billion in overall market cap. Again, so far we are in pullback territory. This isn't a correction yet, as we haven't even seen a 10% drop. All right, moving on to Bitcoin on the 1 day. So if you follow me on the Discord or seen from the last videos, I was saying that Bitcoin would see potentially some resistance at 5,500 before deciding what it wants to do. And how did I get to that 5,500? It wasn't arbitrary, right? You could see just based off of basic support and resistance that this right here is a resistance line. But also one of the ways in which you can project a resistance level is by measuring the base of the triangle or the wedge that the coin was just in, right? So if you take a look at this white line here, which is the height of the resistance and support that we see here, if you plop that onto the end of the wedge or the triangle, when the coin breaks out, you can measure the extent of the potential rally. And these two happen to be the exact same height. So that also confirms the resistance line that we drew just based on the basic pattern itself. So yesterday we did hit that resistance level at 54.88, so $12 away from 5,500, and we are now seeing a little bit of resistance. The key level that I'm watching for here is the 200-day moving average, which is this green line here, which puts us at around 4,600 currently. Obviously, this right here, you could see there is natural support here at 4,800, right? Just again, based off of basic pattern drawing. And this is actually forming a bull flag, which is also a good sign that, you know, the pullback itself is not really significant yet, as long as we stay within this flag. So if we do break this flag, I'll definitely be counting on the 200 moving average for support. We do not want to break this, because if we break this, then I think a drop back down to 4,100 is very plausible. But again, I mean, this pullback was necessary. If you look, we are in overbought conditions. This is the most overbought that we've been on the 1 day since the bull rally that we saw back at the end of 2017 and the beginning of 2018 here, right? This is the most overbought we've been since back here. So clearly there needed to be a cooling off period, and we are seeing that now. As you see, the stochastic is curling downwards, so is the MACD beginning to curl downwards, and we will see potentially a decline in the on balance volume as well. Currently, I do have a stop limit set on my Bitcoin in order to protect profits, right? So if it falls below this level, I will be selling back into USD or USDT, and obviously looking for buyback opportunities. Again, click the link in the description if you want access to the trade alerts. But based on the support and resistance and this pattern that we see here, and the fact that these conditions are expected, this isn't really huge news or bearish news for me. But you still want to keep your portfolio protected by taking the necessary measures, such as setting stop limits at these identifiable key levels, right? So looking at the 1 week, if you look at the 1 week, same story here, right? You're forming a rounding bottom, or if you zoom in further, it does look like also an Adam and Eve pattern. But either way, you'll see the resistance and you know, I confirmed that 5,500 by looking at the weekly chart as well, because at the weekly chart, the 5,500 is right at the 50-week MA. So naturally, you're going to see some resistance at these key moving average levels as well. But again, the rounding bottom or the Adam and Eve are reversal patterns that do come in. You see those coming in downtrends, and if we can get the necessary volume after this cooling off period to push past 5,500, then there will be a clear path to the psychological barrier of 6,000. See, even if Bitcoin falls all the way back down to key support, right, at around 5,100 here, or sorry, 4,100 here, that would be a new bottom, right? Because we were before this bull rally, we were dealing with a bottom of 3,100 or 3,200, right? So as long as Bitcoin continues to make new bottoms without breaching these previous swing lows or these previous support levels, then we're still in safe territory, and this can be deemed as a necessary market pullback before a rally upwards and before continuing to make new lows. So in summary, key levels, if we drop below 5K, 4,800 is the first support level that I'll be looking at, and then the 200-day moving average at 4,600. If we breach that, 4,100 should be the bottom, and if not, then the last bull rally is invalidated, and so most likely we will fall below this 21-week EMA, and the market will fall to its previous structure, and we will then be in the same bear market territory. So that's just the way that markets go. But as long as you can identify these key levels and protect your portfolio and protect your trades and make the necessary swing trades, even in a bear market, then you'll be fine. Looking at Ethereum, again, you could see that Ethereum dropped by more than double the rate of Bitcoin. And when I made the video a couple days ago, a few commenters scoffed at it, but most found value in it. And the thing that was concerning for me was this divergence here between the on-balance volume and between the price. So the price moved up, but the on-balance volume was moving down. So this is showing a lack of interest in Ethereum while the price was moving up, meaning the price movement wasn't justified. You do tend to see that sometimes, more so in the stock market, where the price moves without the supporting volume, and that should be a heavy alarm. So if I see divergence on the MACD or on the RSI, yeah, I mean, I take that into account, but for me, nothing is more significant than a volume divergence, right? Where the price moves opposite of volume. And this right here is bearish divergence, where the price makes a higher high, but the on balance volume or whatever oscillator you're looking at makes a lower high. That is called bearish divergence. And if you need help with technical analysis or need one-on-one training with me, that link is also in the description. Those are one-on-one video conferences or audio conferences with me, and we'll go over concepts like divergences or how to find support and resistance, explaining moving average crossovers, how to draw patterns, etc. So that link is also in the description. I take a maximum of 10 people per month, and those slots do go fast, so hit me up on the Discord or sign up. Anyway, that is it for this video. Keep your eyes peeled for the trade alerts and when I'm going to start buying back into this market. Leave a comment if you have a question or a comment. Leave a thumbs up if you got anything out of this video. Subscribe to the channel. Hit that notification bell. Stay safe out there. Peace.